Okay, welcome everyone. Welcome to the Market View commentary for Monday, the 12th of December. We will have a trade financing adjustment on Thursday. We will have a Market View commentary next week, and then we will be stopping, and we won't have our next Market View commentary until January 9th. So we're going to give you about 3 weeks hearing from us. Shouldn't be too bad. I am always available. Someone's honking. I'm always available that you can always give me a call if you need me, and we'll go from there. So here we go. Let's get started. In fact, a couple of you pointed out some things today, and I'm going to do the best I can to get those answered for you. Some of you made the comment, or two of you actually, about 2023 best picks. And I thought it was kind of funny because one of you referenced a referenced Yahoo November top 15 picks for 2023. And I thought it was kind of in there interesting because there we had Disney, we had Micron, we had Apple, and then the top 5 were basically Apple, Google, Meta, Amazon, and at least, man, I just can't type. Amazon and the last month. The question that was asked to me, aren't those the FANG stocks? And so my answer, of course, was yes. And it comes right back down to the recession going into the beginning of next year. And recession-proof stocks are ones that hold pricing power. And so let me actually just, and yes, recession-proof stocks, meaning hold power, right? They have cash on hand, meaning they can wear. Those are usually some attributes of price holding power. So the short answer is yes, those are a lot of what we're in. For the top picks or those stocks that, can you shut that door, please? Thank you. Those stocks that can double in 2023, we saw a lot of what we're in as well. Disney, Ford, Micron, Under Armour, and let me go to my notes here. Where were they? Boeing was not in there, but Boeing can do a good one. Oh, duh. Bank of America, Visa. I don't know how Visa's going to get there. And I think that's it that we had. Micron. Oh, there's one more. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. Kevin, where are my notes? Where are my notes? Oh, Square. Some of you mentioned today. Hey, some of these stocks can double. In fact, one of you referenced Under Armour. Oh, they said it's going to double. It's a top pick for 2023. But actually, it came up today because of an upgrade. A max pick or something like that. It was due to a gold upgrade. Jim Kohler says my sound is echoing. Are you guys hearing an echo? You guys able to hear me okay? Are you hearing an echo? Might be because I'm talking into a wall. It's in and out, huh? It's modulating. Okay, let's try this a little bit differently. Storms up here. So we're dealing with some winter storms. All right. Let's have Jim and Russ. You're in charge of letting me know. But do I sound good right now? Someone type something in so I know I'm okay. And Jim and Russ, perfect. Okay. Switched over to a different internet. Jim and Russ, you're in charge if I start to modulate to let me know. Okay, so the comment again was, well, Kevin, that's kind of what we're already in. And yes, in all honesty, other than Visa, top picks last year were Disney, Ford, Micron, Under Armour, Bank of America, Square. I don't remember Visa being in there. Top picks for 2022 were Boeing, Apple, Disney, Micron. It's so interesting because yes, they're already there, and it's kind of a no-brainer. And the question, internet, the question from some of you, I'm seeing that it just doesn't like me a little more. The question from some of you was, have we picked up more shares? And yes, we picked up some more shares along the way, except for Disney. But at the beginning of the year, in fact, I can go back to it. November 15th, we picked up some more Micron and give me a second here. Keeve and I just went over this. So the end of last year, we picked up Baidu, and in February, we picked up Baidu. February 1st, we picked up Bank of America. February 25th, we did Meta. We did Baidu again in March of 16th. We held off through the summer, but November 15th, Under Armour shares were added, Meta shares were added, Bank of America shares were added, Boeing shares were added. Well, Ford shares, excuse me, were also on March 16th. What we haven't added to is Apple this year and Disney this year. We've not added to shares on those just because one, Apple hasn't fallen far enough, and two, Disney, we're waiting for it to get back over 100. So top picks in the stocks. Someone mentioned, hey, it's kind of what we're already in. It's correct because most of these were the same thing yesterday. William, I know William is here, and pretty interesting. One, I'm going to have our conversation again because I think it's going to be helpful. William's comment was, so why have the accounts lost money? And the first thing, can someone tell me when, how would I say this? William stated as in, hey, the money's gone. And this is an education or a play on words. But the short answer is, when do you lose money in the stock market? And William, you're not allowed to answer. We've already had this conversation. When do you lose money in the stock market? And for some of you that have had education, again, this is level 1 basic stuff. When do you lose money in the stock market? When stocks go down. That is not correct. When do you lose money in the stock market? Russ, I love it. Todd, I love it. Ooh, Abraham, I love it. Okay, so you guys got it. I love some of these other ones though. When you're not protected, when you're in a recession, when you pick a bleepity bleep stock. Bill, that's what I would have thought you would have thrown me. But here's the correct answers. When you are wrong and close the position. So it's when you close the position, right? When the trade is closed on that stock, when you sell, when you're not protected again. So accounts lose money when you book a loss on the position. That is correct. Now, that doesn't mean the account will lose value on paper, right? That doesn't mean your account won't lose value on paper. And I find it interesting, and it's not fair to say to all of you, so I'm giving you the disclaimer, right? But you book a loss when you close a position for a loss. And it was interesting because back in 2010, we had a little 20% 8-week bear market, and then it came back and we picked up shares and things changed, right? We looked really good in 2020. I think that's what I said. 2020. The first part of the year, we had this kind of drop to the 20%, and then we came right back up. It was a 4.5 to 5.5 month recession, bear market is what it really was called. And we looked fabulous. In 2020, on the low side, we were in that 40% range, and on the high side, we had some in the 80s. That same process is in and where we're at today. It's just more jagged. It's just more jagged. The lows look like it's put in October. So those of you that have gone through charting, what will most likely happen the beginning of next year if you are a chartist, or if you want to define those lows being at 34.91. What most likely will happen next into the future? There we go, mod hit exactly. We probably have a retest one more time of that low of 34.91. Now, it doesn't have to be exact. It can be 3,400. It could be 3,500. But you have a retest or a double bottom, and then you see those things rebound back up. It was pretty amazing because in 2020, we had a 5.5 month rebound. It looked like a V. This looks more like a 2008, except 2008, and really if I can make a 2008 chart, 2008 till April was straight down, an up, a retest, just a little bit lower, and then we worked our way back up till the end of 2009. It was literally a 2-year, 26, 27 month chart pattern. It seems like we're looking at the same thing right now. Right now, we're looking at that same type of chart pattern that would resemble 2008. And let's be honest. I have no prediction of the future. And when you're at that bottom or retest, which will probably happen the first quarter of next year, things are going to kind of look a bit ugly. And then the expectation is we're going to go higher. So the comment to William, and William, you weren't with us through the 2020, the comment is twofold. You don't lose money until you book the profit. And some, how would I say this? Some stock/market trading action takes a crap ton longer than other times. And that's why you hear someone like us, someone like me say, you know, we just don't predict the future. We can't. What we're doing is we're protecting when stocks are most likely going to lose 15% or more 2 weeks before earnings to 4 weeks after. That's all we're doing here. When you're at the bottom or the trough of this year, it sucks. It absolutely sucks. Plain and simple. When you're moving brokerages and you're having issues getting protection on the first quarter because Schwab is a stickler for the rules and we didn't have the same liberties that we had at E-Trade, and they had to understand and do their due diligence on us. It sucks twice as bad, to make a long story short. But this is one of the chart reasons why we're looking for that retest and why I'm so excited about next year. Not to mention, there are a lot of stocks who have lost, and you know, some of the, let's put it this way, some of our positions from highs have lost 50%, 60%, 65%, 70%, 80%, and the worst one is 86. So I have some hope in the next year. Now, to go to your point, William, what if some don't come back? And I'm going to do it two separate ways. And I'm going to put that question in here to finish off. What if some don't come back? So history shows the market always comes back. You can't find a low that we haven't gone higher after the low. Some stocks don't come back. And I usually want to say for two reasons. They're frauds or very poorly managed. Which brings us to the point of yes, FTX CEO Sam, I think it's Bankman, right? He is going to jail. And he deserves it. If I threw out there Theranos, right? And that was the founder / CEO. And I'm pretty sure it's Elizabeth Holmes. 11 years in jail. And that's just how the process works. If we were worried about one of our positions going to jail, and Meta's probably been the worst one, right? Meta and Baidu. If we're worried about them going to jail, we double the puts and we just play it to the downside. In fact, 2008 was much easier than this year, especially if we went and we took a look at a June, right? June, pretty awful. July came back pretty nicely. That's almost too quick. It's almost too quick, and don't forget this head fake and this head fake in June and July that made it really, really hard to understand what we should do. Big drops, got protection on that maybe weren't already protected, rebound, took it off, back on. It was a difficult June and July. It would be easier just to see things go straight down like 2008. As you keep passing through support levels, you add a second set of protection, you make up more money on the way down. For those that were in Baidu this year, that's how we did so well, coming from the 160 range all the way down to the 120 and 105. So looking at this week is the last week you'll probably see big money in the market. But really, we still have protection on, and it all comes down to the FOMC rate hike that's happening on Wednesday. Expectation is we'll probably still see 75 basis points, unless you changed it to 50 basis points based on what Powell said 2.5 weeks ago. If I was counting on a rate hike, well, actually, let me ask you guys. We going to see 50 basis points, or are we going to see 75? Type in 50, type in 75. What do you guys think? So that's interesting. Maud, Todd, Russ, Abraham, Dave, Larry, Jim, all say 50 basis points. Kohler, 50 basis points. Bosserman, 75. Bill, 75. Keefe, 75. Williams, 75. And Bill Brandner, 75. And Mary, that's cheating. She just typed in 50, but you heard me state all the other ones. He already told us 75. He never told us 50. He told us he might go down to 50 basis points going into next year, that there might be a pause, that there might be a lessening. But he already told us 75 basis points right out of his mouth. So if you're saying 50, you're inferring that he could change his mind. But I'm one that says you don't fight the Fed. And in all honesty, we're probably going to take a pretty big drop when 75 comes out on Wednesday. And that was the whole talk this morning. CNBC and Bloomberg, boy, we're going to get 75 basis points. People aren't getting it. Oh, it's like he's going to pause in December. Probably not pausing in December, especially if you looked at the CPI or the PPI numbers or any of our numbers last week. The PPI came in at 0.3 instead of 0.2. Inflation was going higher and back up. Core inflation was twice as bad. Instead of 0.2, it came in at 0.4. Wholesale inventories, 0.5 versus 0.6, came in a little bit better actually. The biggest one is initial claims, came in 230 instead of 220. They want to see 250, 260, 270. Well, that's kind of a stupid number to look for when people are doing seasonal hiring. That just doesn't make sense. Consumer credit is going up, 28 billion versus 26.5. Factory orders are higher, 1.0 instead of 0.7. We're not seeing that reduction that warrants 50 basis points. It was pretty damn hard today to only be up 0.84 when you have a 1.43 market. Today we were upside down by 0.4 0.59 basis points, little over 0.5%. But we don't see that it's prudent to be taking off protection before a rate hike. It just doesn't make sense. The good news is this puts like Boeing and Under Armour, the protection's way down lower. But if we're wrong, those will shoot much higher, and we'll have a couple where the protection is out of the money, where it's not necessarily where it should be placed. But it gives us the opportunity to be wrong and have a couple of positions really take off higher. With that said, this week, CPI numbers tomorrow, they're expected to be at 0.3. If they're not lower, it will affect the Fed meeting as they're watching and calculating the numbers. Don't be surprised if we see a 75 basis point rate hike on Wednesday. And yes, it will probably crush the market world. The Dow will be down 800 points and the S&P 250 points. It'll be a bit of a bloodbath. No, we already have protection in place and we're not looking to take it off. We're going to go ahead and we're going to be prepped and ready for what we see. If we take a quick look, it will basically kill the Christmas rally. But being where we're not quite above 4,000 again, we're probably looking to head down to that 38.48 through the month of December. We're going to go test the 50-day simple moving average, where it has had about 5 weeks to get those orders in place to have it act as support. It's really that simple. It's that simple. This isn't rocket science. The reality is, if we do have some pretty good earnings, if we do have a 50 point basis hike, and he talks about slowing down in the near future, going to be awfully tough to break that 4,100 level. That 4,100 level is really some pretty decked out areas of resistance. It's also the 200-day moving average. There's a ton of sell orders, and those sell orders have truly had August, so we have September, October, November to be in place and to adjust. There are much more sell orders sitting there than there are buy orders on the 50-day. That is why it acts as such a difficult resistance level to get above. So not much of a Christmas rally expected or in place this year because of the way those technicals line up. I'm trying to well, let me just go this way. Some pretty interesting articles. Here's what America's top CEOs are saying about a possible recession in 2023. Don't be surprised when they all are calling for recessions. They're basically all there. I just found an interesting article. Again, it's someone that, again, is just doing a study on market crashes. I'm going to let you read through it. But really what it comes down to, back half of 2003 looks pretty good. That's what it's going to look like. We'll have that momentum in the back half, and there's some opportunity. I found a very interesting article on Disney versus Netflix. Spoiler alert, Disney has the edge. Plenty of information in here. This is one you guys definitely should read through. From Disney to Target to Boeing, retirement is a thing of the past. It's kind of funny how you see CEOs working at 65. I'm going to go so far as to say it's because the newer generation is a give it to me quickly. They don't have that work ethic. To see someone that'll spend 12 hours a day in the office, you're not going to find it most likely in those 40 years or younger range. That's when it starts to change. I see it with my brothers, even though they are 40, they're 43. There's a generation gap between me and my brother, a year and a half younger than me, and the two twins. I'm sorry to say that 40 years or younger, I feel, doesn't have that same work ethic that you saw above that. A pretty interesting article on how CEOs are working much later into their age and their years, and obviously making money doing it. And I found an interesting one, 25 facts you didn't know about Baidu. After everything I've mentioned, it feels like the last 2 or 3 months, I still have people talking to me or just asking me about Baidu. A really interesting article. I do suggest you guys spend the time going through this when I get it posted. I'm trying to have David Westlake get that posted here sometime this evening. But do go through and read through this, because I think you'll find it pretty darn interesting with really what's out there. I'd like to finish a little early today. Any questions you guys have for me? As I saw emails come in this week, or that I've had a couple conversations from last week, except for William for this morning, right? Any questions you guys have that maybe I didn't get to that was emailed to me that might be important? Of course. So let me go back up. Yes. And Tage and Emily asked me this question earlier too. Actually, let me just go back down to the question. Sorry. I know it belongs back up there. Forgot it. Question. So how is it that stocks can go down and we still have a tax bill? So, and this is primarily going into 2021, right? Where we had some starts of things that are going down. So when stocks go down in the caller trading process, and if we do it right, what goes up? What goes up when those stocks go down? Puts, there you go. Let me go ahead and put profits, right? Pretty cool. Which we close for a profit. The term is a booked profit, right? Even when stocks are down. So your stocks go down, but our protection, we're booking a profit on. We do our best to touch base with you to say, hey, do you have some carryovers, this or that? Russ and I went through this last year, right? If you say you have some carryovers and I comment on what we're going to close, we're going to book a profit, which means as stocks come back, that's not taxable for you. That's just stocks coming back. In 2020, some people had a 40% increase in a personal account and their tax bill was minimal, like on 4 or 5 grand. So we actually had one that was negative. Kevin, how the hell am I up like 48%, 42%? And I've got a loss. Well, when stocks go up and they're rebounding and you're losing money on the puts and we don't take a profit on those stocks, the reverse happens. So is it possible for stocks to go down, you still have a tax bill? Yes, because we book profits on the puts. With that said, we do look at the end of the year and talk with you and do the best we can to do some tax selling so that you don't have a big tax bill. If we're within, rush lists, we're in about 10,000, we don't say anything, we usually let it go. If it's higher than that, then we like to give a call out to you. But good question, I forgot about it. William, hopefully that gets it answered again. Are there any other questions? Guys, I appreciate you being with me. Todd, hopefully this was helpful for you. Actually, it's Tobe. Tobe, hopefully this was helpful to you. Nice to have you here again. Any other questions? All right, guys. Hey, I'm going to wish you guys well. I appreciate you being here. Enjoy your Christmas holidays. And with that said, you'll have Keeve on Thursday. I'll be next Monday. And guys, after that, please enjoy the holiday season. Appreciate you guys being here. Have a good evening. See you next Monday. Bye-bye.